Did you know that you could be losing out by leaving your money in a high interest savings account or term deposit? Now, over the last couple of years, it might have been easy to get a term deposit rate paying, say, 5%. But those days might be behind us because the Reserve Bank of Australia is poised to cut interest rates this year, which means that you could see the interest rate on your savings account and term deposit fall as well. That leaves investors with a bit of a question. In this environment, how can they boost their income generating potential? Hi, I'm Marc Jocum, Senior Product and Investment Strategist here at Global X ETFs, and today I'm excited to share with you some income investing ideas on how you can create a passive income stream for your portfolio. When it comes to income investing, we're talking about one part of the total return component of an investment. You've got the capital return, which is referred to as the price appreciation, but then you've also got the yield component, which is referred to as the income return. So there's three types of income returning investments that I want to take you through. The first is around fixed income or bond investing. Second is around high dividend strategies. And thirdly is covered calls. So let's take the first one, fixed income or bond investing. This is an IOU where you essentially lend money to the government or a corporation, and in return, they'll pay you coupon payments or interest along the way, as well as returning your principal at the end of the investment. Now you can access government bonds or even corporate bonds, both in the US and Australia. Then there's high dividend investing. Now this is very popular in Australia. We are the land of dividends. In fact, the majority of returns in Australia's share market has been generated by dividends, given we have a higher payout ratio. And we also have after-tax benefits such as franking credits. And that's why dividend investing strategies are very, very popular here. Finally, there's covered calls. Now this is a type of investment strategy where you hold a basket of shares, but also sell a call option on top of that in the options market. And that enhances another layer of income through the options premium. So you get your dividends, your franking credits, and then the options premium as well to create an all-encompassing income investment. So how can you incorporate income into your portfolio? Well, firstly, it depends on your personal circumstances. So think about your time horizon, your cash flow needs, and also your risk appetite. And let's take two different types of investors. Let's talk about a young investor. This one has a long-term time horizon and mainly wants to invest for capital growth. So income might not be a big focus, but they still might want to incorporate just a little bit of exposure in the satellite of their portfolio, the fringes, into income investing assets. And now let's talk about someone who's getting close to retirement, who's focusing on cash flow or meeting their cash flow needs or expenditures. Well, that's where the bulk of their portfolio might want to be in income generating investments, such as dividend shares, and then also using the bond component, which has a bit more of a defensive tilt to help cushion your portfolio during market downturns, which are naturally income focused investments. And this is where it depends. You might want to blend your income assets. And it's very important to do that because if you're just investing in dividends alone, well, dividends might dry up. And I believe one of the best ways to invest from an income perspective is to have multiple layers and multiple sources of income through the different asset classes that we spoke about. If you'd like more information on income investing, head to our website, www.globalxetfs.com.au. Thank you for watching. We look forward to seeing you next time.